Hey, Jamie and Steve, how's it going today?
Hey Scott, what's going on over there, Steve?
Hello, happy Monday, guys.
Yeah, happy Monday, and thanks everybody for popping in here. Looks like we've got a pretty decent crowd in here for a Monday, so welcome everyone. For those of you, I see several questions up there about linking to Think or Swim. If you're having difficulty doing that, as Chris pointed out to me, you always have to make sure you're in administrator mode. You have to be logged on as administrator. That's one of the little kinks for linking to Thinkorswim. Now, if you're still having problems, probably be a good idea to hit the live support area tomorrow sometime during regular operating hours, and they can set you up with a screen sharing session and get you sorted out there. Thinkorswim has always been a little bit temperamental, so just bear with us, and we'll eventually get you ironed
Bill
out
has
there.
all the secret shortcuts.
Yep. Just hit the live chat area and ask for Bill. He is a master at linking TI to all of the various products out there, and Thinkorswim's no exception. All right. You can't see my screen, yes, Steve?
Yes, I see
Okay,
office hours.
just making sure here. Boy, it's been a
November 25th.
crazy busy day in a good way, and got a lot of cool stuff to share with you guys here today as well. So without further ado, let's make the lawyers happy, and just want to make sure that we take the time here at the top of all of our webinars to just let you know that we're all just traders, been doing this for a long time. We're going to share some good ideas with you guys, but please don't take what we share with you as investment advice. This is for educational purposes only. If you do need investment advice, please seek out a registered investment advisor, some other licensed individual like a Series 7 stockbroker, someone that can legally dispense investment advice to you. All right, I think that's close enough for government work there. Always like to also take a little bit of time at the top of the hour here, and I know there's probably some brand new wet behind the ears users since we just came off of our biggest test drive ever that lasted for 2 weeks. I want to thank everybody for attending that. So it's not just the award-winning state-of-the-art technology that we have here at Trade Ideas, although that is the core of our existence, but we've also fostered and set up a really great community around the technology, and it all kind of starts off at the top here, upper left-hand corner. And Steve, you're right, I need to get my drawing tool installed as well. Maybe I'll do that tomorrow. The Traders Room, hosted by Barry Anderson. Now, if you shopped around for trading rooms on the web, you know that most of them, if they appear to be worth anything at all, they're not free and they're not cheap, okay? Not the case with ours. It's a high quality room. There's no charge to you. You don't even have to be a TI subscriber to get in there and try it out, see what's going on in there. That's pretty much unheard of in the space, but that's what we have. So Barry does a great job, not only at showcasing his trading style, but the way that he uses the technology as well. You got traders from all different skill sets in there, from beginners to seasoned pros. So it's a really great place, not only to learn, but to see how Barry trades and uses the technology as well. And by the way, Barry loves to answer questions during the day, so that's also a great resource if you just have general questions about TI and the software. Of course, today's Monday. You get myself and my trusty sidekick, Steve Gomez. Steve takes the helm tomorrow with the Trade of the Week, and Andy Limhoff is going to ride shotgun with him. Q&A. Wednesday rolls around, old hump day. I'd like to change it up a little bit. We bring in the CEO and founder of Trade Ideas, Mr. Dan Merkin, along with Brad Williams, who is our chief in-house technical officer. Been around since the firm was founded back in 2003. And we all have relationships that go back much further than that, as Steve can attest. Andy's Trading Studio is going to round out the 5 p.m. Eastern webinars. On Thursday, you get Andy, and I ride shotgun with him. And that pretty much wraps it up for the 5 p.m. Eastern webinars. We have something going on Friday, but it's a little bit different. It's what I like to call Free for All Friday. It starts at 11 a.m. Eastern and typically goes 2 to 3 hours, depending on the crowd size there. Bottom line is nothing is off limits. So anything TI related, whether it's strategy fabrication or some of the basics of how to get around, Nothing is off limits there. So if you like live support on the fly for anything TI related, you get myself, Steve, Andy, and one of our other associates, Sean McLaughlin, who's been gallivanting around the globe, going to India and Japan, but I think he's back now, and hopefully he doesn't have food poisoning or anything. So it'll be
Nope,
good to
we
hear.
made it.
Be good to hear his stories. But you get 4 people in there all addressing your questions at the same time, so it's a great resource. So take advantage of the Friday support session. In addition to those 5 webinars, we've got 4 more coming at you Monday through Thursday. Now, these are more structured, beginning 101, 201, 301, and 401. The content stays the same. It's static in all of these webinars, but these begin at 12 p.m. Eastern, Monday through Thursday. Always recommend that if you can, do so. Attend the live versions, because if you do have questions, you get to ask the presenter in real time. You get those questions answered in real time. But these are great at getting over the learning curve of trade ideas quicker than later, because the product is becoming more and more advanced. You know, we've been adding layer and layer and layer of technology to the TI Pro ever since 2003. So, wow, it's going to be 16 years here at the end of the year that we've been building this product. Wow, seems like just yesterday. In any case, 101 through 401, great resource to get over the basics. And if you can't attend these in the live format, fear not. You might have a job that gets in the way or something like that. We've got all of these pre-recorded on our YouTube channel, so you can go back and watch these as many times as you'd like. And if you have any questions, you can just email us at info@trade-ideas.com. We'll get back to you as soon as possible. So once again, these are all pre-recorded on the YouTube channel, and ladies and gentlemen, we've got a gazillion other educational videos on our YouTube channel as well. So don't forget about it. It's a great resource, especially when you're new. So all in all, 9 webinars coming at you each and every week, so take advantage. Little chart here showing new Trade Ideas accounts since we unleashed the first AI module upon the markets in the very beginning of 2016. And of course, every year after that, we've experienced some significant client growth. Would expect that to follow through in 2019 as well. So this is just marking the introduction of the very first AI module. We have 3 of them online now, Holly 1.0, 2.0, and Neo. And we're probably going to be doing a little bit of consolidating with the AIs, kind of crunching them all back down to 1, just be less confusing for everybody, but the end result is the same: high quality, statistically weighted entries being brought to you by the AI. Now, the AI is one thing. Brokerage Plus is another thing. Brokerage Plus, just a quick peek, this is our trading interface that we designed to be used with interactive brokers. Currently, it is the only broker that you can access Brokerage Plus and trade live with. However, as you all probably are already aware, the race to zero is upon us. All right, not too long ago, it was interactive brokers that said it first. Of course, we'll get into the details of that a little bit later. Next thing you know, Ameritrade, E-Trade, Fidelity, everybody's going, hey, 0 commissions, okay? And this is very eventful, very impactful in a good way when it comes to our technology, and we'll get into that a little bit later in the program here. But before the race to 0 even started, these were the numbers that were being posted, and we were sharing with you guys about how people are adapting and using it within the interactive brokers community. Orange is demo orders filled, blue is live orders filled. So you can see month by month that's been slowly increasing. We expect it to continue to increase. However, now that everybody's at 0 commissions, you know, is it going to be interactive brokers leading the pack, or maybe it's TD Ameritrade, which is getting acquired by Schwab, or maybe it's Schwab? Maybe it's this firm that probably no one's really ever heard of called Alpaca, which is one of the first broker-dealers to go 0 commission, but you might not have ever heard of them. But the bottom line is, pretty soon we will have Brokerage Plus ported to a broker-dealer with 0 commissions. And once again, we'll talk about the benefits of that here in a little bit. All right, on to today's list of things to talk about. So Steve, here we are at the same old. Exciting things going on with the SPY, and hey, the IWM. It's alive. It's alive. So now would be ideal if I just kick it over to you,
All right.
and you can show us what
Show
I
you
am
guys what I've been
blathering
working on
about.
over here.
Mhm.
Sure. You gotta get one of those pens, Jamie. They're a lot of fun.
Whoa.
All right.
Psychedelic, man.
All right. So, yeah, you want to draw a most perfect bull market chart? There it is right there. You know, the moving averages, nothing has changed since we've last spoken. Everything was just fanned out perfectly. And then we have this last little dip, you know, little the market gets ahead of itself a little bit here with the gap, and we get 2-3 steps forward and 2.5 steps back, and right in line with what the old 10-period moving average. 3 touches on it, couldn't even close below it once. Again, the closing price to me is what is the most interesting part of the daily 10-period moving average in the candles. And what was nice was we had a really nice setup, you know, going into trade of the week. I'll take that any day of the week. There's a lot of good setups, so we'll talk about that tomorrow for sure. As far as the market goes, again, if you're short, you're just waiting for the black swan to come rescue you. Maybe it'll happen, but today it didn't, and it just continued on its way, following and adhering the momentum. So the momentum is so strong in this market. The 10-period moving average keeps it in play. Again, last week we had 3 days of decisions, and the market told us that this inflection point is telling us that momentum is still intact. Another nice gap today. Maybe we get ahead of ourselves, and maybe this little gap comes back and gets filled at some point. But nonetheless, it's a march in the higher direction, and there's no bear case in sight to be made. It's new highs across the board. New closing highs today in technology, same kind of a thing, a bit more sloppy there on the moving average front, but nonetheless, you know, the nice bottoming wicks. The trend stays intact. You know, there's just no bear case to be made here. Maybe something will come out of the woodwork, but I'd hate to be short this market. It's a 401k participating market, and people that are, you know, silver and gold are probably starting to get upset and wondering, well, maybe I should be selling silver and gold. I'll just jump over to there real quick. They don't look too healthy, do they? Completely different story over there. They broke these moving averages, and now we have the inverted 10 below the 20, below the 50, and the price action's looking ugly. You know, so if you're just got all your money in gold, you're watching the people with the 401ks, just be happy, 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 because the market is not giving any reason to sell. And then, as Jamie mentioned, we've been talking about the IWM ad nauseum for so long, only because this giant, long, protruded trading range, and as we know, the longer the trading range, the more interesting the resolve that can come out of it. Well, this is actually the first time I backed out and looked at it here, and look at that. We're actually there, and if I put a line right there, we're above that prior high. So, you know, that's a sloppy line for the most part, and the reason I drew it sloppy is because it even pertains way back here as well. So look at all these touches. Look at the significance of today there in the IWM. So let me just pose something here. If you're watching the AR, you've got some strategies, you have a method, and tomorrow the market starts, or the trade ideas, I should say, alerts and scans start to light up with stocks under $5 and under $10. Well, guess what? That's probably because the IWM Russell 2000, the small cap ETF, the small cap index, is breaking out, and this is where the significant alpha is probably going to be lying for here to the end of until the end of the year. Everything else is at new highs, but we've been talking over and over about this thing having a lot of making up to do before it gets back to its new high. So if you're watching Holly AI tomorrow and the Mighty Mouse strategies and little big guy strategies are firing, I'd be giving them a lot of weight, considering this giant backdrop. I mean, I really can't say how significant this is. And thankfully it came, because we've been talking about it and waiting for it. And the trade of the week last week actually was the IWM, but patience is a virtue in this game, as you can see, especially in the swing trading. So fully expect a lot of follow through on that. Jamie, did you log in and reweight your 401k like you told me you were going to do to the small cap? You still got time.
No comment.
I'll show you after the webinar. So, Yeah, I think that's where the alpha is going to be made right here. This is where the money is going to be made for the big fund managers who have billions of dollars to push around and don't just want to tie themselves to the index funds. They want to separate themselves from the index fund. And I think my theory and my thesis is starting to come true here, so I'm happy about that. And then back over in the no man's land. You know what? This is interesting. I don't want to steal Brian Shannon's thunder, but he's working on something interesting, and he'll talk more about it when it comes out. It's kind of an official paper, a white paper he's doing, and it has to do with the old Dow Jones transport. You know, JC talks a lot about the transport index. When we think about the transport index, you think about airlines transporting people. We think about FedEx. We think about UPS transporting packages. But in today's transport, we got new players. So how are we going to look at the Dow Jones transport index? Do we include Walmart? Do we include Amazon Prime? Do we include Uber? Do we include the food delivery services, Grubhub? You know, it's a whole different paradigm. So kind of an interesting angle. He's doing some research on that. Stay tuned for that. So there's the Dow, you know, also at brand new highs for the most part. So there's just no bear case to be made across the board. I think that's where the alpha is going to be in the next couple months in the small caps. So that's really all I'm seeing. Yeah, and self-driving companies. I mentioned that to Brian also, Steve, and I said, what about Tesla? They're making giant trucks. They're going to be trucking in 5 years, big time. So interesting.
Right, and the drone deliveries haven't even really started yet, and that's...
Yeah, well, if you follow Jeff Mackey, which we all did at the event, you know, I don't think the drones are going to happen. He says he has a dog that really doesn't like drones, and it's just going to take one car accident and the whole thing's over. I don't know if the
Yeah, I
drones
mean,
are going to work
there's a
out.
tremendous amount of liability when you've got things flying around.
But when you're
So
talking long haul, like Steven mentioned, point A to point B, cross country, there's no reason why some software and some Tesla trucks aren't going to start getting the job done.
that is correct. All right, good stuff, Steve. Yeah, an exciting week is unfolding for us here. So let me steal the screen back here, and you should have eyes on now. All right. So what we're going to do here is I'm going to skip over expectations initially here. We're just going to jump right into Holly. We're going to talk about Holly's activity, showcase a few trades here. Then we're going to circle back around to my CC windows because it ties in nicely to what we'll be talking about in preparing for the zero commission game. And when I say preparing for the zero commission game, people out there are probably going, well, commissions have already been a zero for a while. What does he mean by preparing for it? Well, I mean preparing to use our technology with the zero commission structure, because a little blurb about that real quick here while it's fresh on my mind. We can generate some really tasty looking statistical data sets here, but due to the fact that commissions were always a barrier, all right, a lot of these data sets weren't really feasible to deploy because of commission, all right. It was a huge cost, and as Dan, our CEO, has said multiple times here, it's good for the trading community, all right? A barrier has been lowered. Commissions are no longer going to be a factor. Having said that, you know, first we have to get Brokerage Plus ported to a $0 broker dealer, which is currently in the works. Do I know which one it's going to be just yet? No, but hopefully it's going to be sooner than later. Okay, I'm going to stop right there. Probably losing some people already. Let's go ahead and talk about Holly real quick here. All right, so what I've done here, and when we're talking about Holly, because I know there's some new people in here, they're probably just fresh subscribers, we've got two major panels that we pay attention to here. This is the strategies panel, which shows us all of the strategies that each module came to the party with today, the party being the trading session. And if you want to see all of them, just make sure when you right click and you go down here to segments, you're on all, because you can view just individual modules, Holy Grail 2.0 or Neo, but if you'd like to see everything, just make sure that that little tick mark is on check so we can see all of the strategies that made the cut here for this trading session. So as Steve was saying, tomorrow, check it out, Mighty Mouse. If you see Mighty Mouse show up, there's also another small dollar stock strategy, Little Big Guy, and we were just talking about it. The 5-day bounce, I think those are all under 10 as well, which I don't see it on here today. But just keep that in mind. If we've got, you know, a nice assuming we don't have a huge gap down or the market's not doing something crazy like going down tomorrow, heaven forbid, pay attention to those lower dollar stocks because the IWM might be continuing its run tomorrow. And that would be some good opportunity. All right, so the upper panel here is the trade blotter for the AI. If my mouse will cooperate here, I'm just going to expose the whole blotter here. Almost. Let's get it stretched out a little bit more. And just like the strategy panel, you want to make sure on segments that you're showing all, otherwise you'll just see the individual modules. So now we're seeing all of the trades that each and every module created today or signaled to us. Now, number one, we got some impressive gains. And you can see I've got several different columns here. I've got conservative profit, I've got moderate profit, and I've got aggressive profit way over here. All right. So we renamed these not too long ago. It used to be risk off, risk on, and then bull risk. Okay. But those have all changed. So now we have conservative profit, moderate profit, and aggressive profit. And just to recap real quick here, conservative profit is Holly obeying her trading rules, just like me, you, or anybody else would do when we're in a trade. We put that trade on, we have to control our risk. We use a stop loss in case we're wrong. We get stopped out, we move along. All right. With Holly, she has a stop loss. Sometimes she has a profit target, but not always. So that's two reasons why she could close the trade out. One of those get hit. Also a timed hold. If I kind of quickly revert back to the strategy panel here, you can see what all of the intraday hold times are designed for right here in the time stop column. All right, these are all intradays. All right, now the timed hold, stop loss, and profit target, and then she has two audibles that she can call and close out a trade early in the form of profit save and reduce risk. And typically that's when the trade stalls out, isn't heading in the direction that it's supposed to. The longer time passes, the more likely it is for the AI to close that trade out early. All right. So first and foremost, we just have to take a look at this one because these types of percentages, while they do come around, they don't come around that frequently. And you can see here, conservative profit with Holly initiating a profit save booked 10.8% in conservative mode. That'd be an exit right about here. We can see the entry signal. Let me squish this up a little bit. All right, here's the entire session in 15-minute candles. What a nice buy right here. All the way up to here, this shaded area right here is going to coincide with Holly, or the AI, I should say, getting out of the trade in conservative mode. All right, right about there, still clipping 10%. But boy, if we stayed in this thing to the close, almost 35% move, which is crazy, okay? But here it is in black and white, ladies and gentlemen, produced by the AI today. Of course, it is a low dollar stock, just as we were talking about. So when you're seeing these plays come out, keep in mind Holly's strong suit. In essence, if she were a superhero, her superpower would be bringing statistical viability to each and every one of these plays, as we can see once again from the strategy panel. These were the odds coming into the session based on last night's analysis, and then we can see actual performance today, because these are based on the back test over here, and this is real world performance. So when we're playing this game, a strategy can either overperform or underperform, or come in right at its expected participation rate or performance rate there. So just keep that in mind. That way you can make sense of these columns here. Now, in the old days, before we renamed conservative profit and moderate profit and aggressive profit, we called it risk off and risk on spread. Now we have to call it, I guess, conservative versus moderate spread. And this SRNE is a really good example of a big spread between conservative profit and moderate profit. And by the way, all of these numbers right here, made $100 in conservative mode, or I could have made $322 in moderate mode, moderate risk mode. These numbers are all predicated, if I go to options, on my AI sizing, trade size right here. And you can see I'm using the risk-based stop loss. $100 is what I want to lose if something gets stopped out. I don't want to lose more than $100 or maybe just a hair over with slippage. So that's what all of these position sizes are being predicated on. All right. For SRNE, it was 400 shares, but you can see what each share increment for each and every trade is based on that stop-based risk parameter. All right. So $100 was gleaned in the conservative profit mode. That's why she got out. Profit save. We had a nice little stair step up here over 1, 2, 3, about an hour period, just nice and easy. Then we got this sideways action right here and a little down move in this final 30-minute period in conservative mode. And that's when she pulled the plug, all right, in profit save mode. But the game here is trying to extract some of this spread between conservative and moderate profit mode. And three times more in moderate or aggressive mode here. So get into a habit. You might have been in this trade, you might not have been in this trade. If you weren't in the trade, maybe you saw the AI close the trade out, which even if you're not in the trade, it's always a good idea if you see the AI closing something out in profit save or reduce risk mode. A lot of the times, some of these exit signals that Holly puts out can also be good entry signals. Or if we're in the trade already and we see Holly closing it out, we can make the decision to acknowledge, hey, Holly's getting out or the AI is closing the trade, but I think there's a little bit more oomph left in this trade. So we can ignore the AI signal if we're already in it based on the original AI signal and go, you know what, I might keep the whole position here, even though I know the AI is closing the position out, or I might sell half with the AI and keep the second half because I think this thing might move higher. And of course, we can see SRNE did continue higher. But if you hold on to that second lot, good idea to exert a little risk management. If we took the money with Holly, or man, it's going to take me forever to not say Holly anymore. But if we took half the money off the table with the AI, then what are we going to do with that second lot if it does roll against us? We can either keep our original stop or ideally set the stop for the second lot on break even. That way we're guaranteeing that we're going to have a profitable trade. If we get rolled over and stopped out for a break even on the second lot, we still locked in the profit on the first lot. But not only was SRNE a huge percentage mover today, but also a good example of trying to extract some of the spread between conservative profit and moderate profit, as we can see here. Now, I'm going to resort by moderate profit here, and we're going to take a look at, let's see here. Got to get my cheat sheet over here. Yeah, the AKBA. AKBA was a really good one as well. Okay, so here we have AKBA, which was a Mighty Mouse trade from today, spun out by the original Holly module, Holly 1.0, or what we affectionately refer to as Holly Grail. 32 whopping dollars. And why did she get out of the trade? Timed exit, okay? Mighty Mouse looking at a, let's see here, just so you guys will know how to do this, Mighty Mouse, 60-minute hold time. So stop loss did not get hit, profit target did not get hit. It was simply a timed exit. Get back over there to it. Now, as you interact with the AI and start seeing all the plays that come out, you're going to start to notice certain characteristics. Now, if I can find my single stock window, it has left the building. There we go. All right. So I'm going to pull my single stock window over here. And let's just look at some of the positive characteristics of this trade. Now, number one, we had statistical viability on our side because Mighty Mouse came to the session with 64.7% probability. This one underperformed today. However, if we look at it on a trade-by-trade basis, here's the entry signal right here at 439 from Holly. Now, we have statistical probability on our side from the very beginning. But check out what was happening on the chart here as well. Now, those of you who've listened to me before, you know that the opening range breaks are some of the more simple patterns, and if we've got volume behind them, they can work nicely with low risk. So we've got something coming from Holly. It's got statistical weight on its side, but look at this potentiality of a secondary pattern unfolding right at this time. I mean, it's right under that line, that previous high, but guess what? It worked. It moved higher. So we've got statistical viability from Holly. We're just about to crack the opening range, and we've got volume on our side. I mean, that's 3 golden stars right there, ladies and gentlemen. And when you can stack up things like that, well, that means something. As far as the volume goes, check out how AKBA finished the day at 3.68 on the relative volume scale. That is pretty hardy, because normally on the 3-month average, little guy only kicks out not quite 1 million shares, finished well over 3 million shares today. And yes, Joanna, I know that it's hard to see my pointer. That's why I'm going to remedy the situation, hopefully before the next office hours, so that it's easier to see my pointing tool up here. I'll have to bust out with Steve's fancy coloring tool there. I've just been dragging my feet on it. But nonetheless, look what happened. We got a secondary pattern emerging here. So if we took a little position right here with Holly, this would have been a great time to add to the position as it goes sideways for about 30 minutes here, and then finally jumps up and really boogies off of that range break there. All right, so a lot of the time, well, some of the times, but not all the time, you'll notice a secondary pattern either in play, as Holly's calling it out, or one that is just about to, or one that has the potential. In this case, AKBA was a perfect example of that. And as you can see here, a pretty big multiple between conservative profit, which that's Holly getting out right there, and where it ended up at the end of the day. I mean, that's a big multiple right there, about 6 times, a little over 6 times what the AI plucked out in conservative mode. If you just said, you know what, this thing's lifted off nicely, don't really see any reason to get out of the trade, a break-even stop once the AI exited would have kept you in this one for the remainder of the day. And that is going to be the theme of a lot of these trades today. A break-even stop would have kept you in after you see the AI get out. We also had a nice spread here between conservative risk and moderate profit, or moderate, yeah, okay, risk, profit. Getting my words all mixed up here, but $66 versus 228, a little over a 3 extra there as well. And you know, once again, we've got a profit save. So just keep in mind as you move forward and start to watch and engage with the AI is not the greatest when it comes to exits. You know, the real power underneath the hood here is bringing us statistically weighted entries, and sometimes, but not all the time, we can manage the exits a little bit better than the AI based on our chart reading skills. But man, hey, what a beautiful little uptrend here. Kind of pauses at the top here, and once again goes to sleep for a little bit, setting up for a range break. Even though it's very subtle, you know, it pops up again here about noon my time. Just a little bit, I think I'm 1 hour behind Eastern, yeah, here in Central Time. So once again, you're already in a very nice trade that's working. You get the opportunity here to add to the position. And if you did so, you were rewarded yet again, all because this was brought to your attention by our AI. Now, I'll be remiss if I didn't point out the 10-period moving average, all right? This thing was golden on a lot of trades today. SRNE is a really good example. After we topped out at the top there, we got back there later on, but check out what happened once we closed one 15-minute candle below that 10-period. We took a little swoon down. Of course, it came back up here and reclaimed it because the buyers were really in control on SRNE today. But a lot of the times, this can be a great guiding hand for you. Anytime you see something coming back down to touch or close below that 10-period moving average, that might be a good example, or it might be a good time to take some take some profits off the top there and see what happens. AKBA, another great example. I mean, that thing was levitating above that 10-period pretty much the entire day, and there were a lot of other stocks they were doing the exact same thing today based on the nature of the market. So we'll time check here. All right, we better move along because I could sit here and talk about these trades all day, but don't want to just take a peek at all the winners here, which a very handsome percentage gain from a lot of these things. But even if we go back to moderate profit and just kind of take a look at the extremes here, sure, we're going to have our stops and our losers just like any strategy. But at the end of the day, when you tally up all the columns, there's more green than red left, and that's really what it's all about in the grand scheme of things. So just keep in mind, the AI will have its losers just like any other trading system out there. But especially since we're back into a trending, well, I can't really say it's a trending market yet, Steve. We hope it's going to trend up for a little bit, but we all know what happens to the AI trades and the AI performance when we do have a trending market, much like we had back in these periods here. We've all seen it, and those are some real juicy times for the AI. So we'll see what happens tomorrow as far as market direction goes. All right, Trenton, I'll get to your question in just a minute here. So what we're going to talk about now is we're going to backtrack and talk about expectations and how they played out beautifully today, and how this ties into preparing for the zero commission game using our Trade Ideas technology. So real quick here, here's what my compare count window looked like after the first 15 minutes today. And for those of you who might be seeing this for the very first time, what are you looking at here? Well, compare count window is something that's available in the product just by going to new and going to compare count up here. It lets you keep count of events that you think are, for lack of a better term or description, important, okay? For me, it's stocks hitting highs and stocks hitting lows that have a market cap in excess of $4 billion with accelerated short-term volume. And I'm only looking at these readings after the first 15 minutes. So the market opens, those stocks start hitting highs and lows, doing accelerated volume, and at the end of the 15-minute period, I take a peek, just as I did here. You can see this is time-stamped, 15 minutes into the open, since the market opens at 8:30 here in the Central Standard Time. And we can see that bullish events outweighed bearish events to the tune of 59% to 41%. Now, just to shed some light on what is a strong reading. Well, typically I don't really pay much credence to it unless it's above 55%. But man, when it starts getting close to 60, which those days don't come along very often, some of you out there may have heard traders that have been around a while talk about how, you know, there's 4, maybe 3, 4, 5, 6 days a month where they make all their money because the trend holds up, whether that be short or long. That's a pretty accurate description. Most of the time, you know, especially as of late, we might get some upward action, but there's always going to be some pullback. There's not going to be a whole lot of follow through, but not the case today. Okay, so when I saw these readings after the first 15 minutes approaching 60%, and you know, later on in the session, by the first hour, the second hour, we were up at 80% green, which is crazy, okay? But a 59% reading in the first 15 minutes, that definitely got my attention this morning, okay? So it impacted some decisions I made on how to run a certain strategy, okay? And before we move on to that topic, and it's funny because I was scrolling through my Twitter feed early in the morning, and I came across a tweet from Peter Brandt, who has been around in the technical space. He's been doing this since the 70s, okay? If any of you follow him on Twitter, you know what I'm talking about here. But, you know, he's been around a long time, very good technician, and this tweet that he sent out caught my eye this morning. There are 2 components to a profitable trading idea: direction and timing, okay? And of course, what he thinks about the prospects for the market is irrelevant. How he trades the idea is all that matters. So direction and timing. And boy, you know, he hit the nail on the head there. Okay, it's all about direction and timing each and every day. So, what I've been trying to do here lately with our paper trading module, now that we have the ability to just take algorithms that we think might do good based on the back test, but actually see them play out in a real time market environment, it's a whole new way to learn. Okay, so based on my compare account readings this morning, and of course where we were in the market, we had some room to run based on these past 3 days, which Steve was pointing this out earlier. 1, 2, 3, 4 days down, but look at those wicks. So as of the close last Friday, thinking to myself, yeah, we might have a good chance for a green day. Of course, I didn't know how green of a day, and I certainly didn't know how these compare account metrics were going to play out. So in the end, I took a strategy that was originally designed by me to be a short strategy based on backtest results. Okay, it's called the 250 short. It was originally designed because from a backtest perspective, it looked really conducive to short stocks that were hitting 250-day highs. All right. However, what I've learned over the past few weeks is, what? I can take this strategy, and based on what I'm seeing in the first 15 minutes or so, I just have to decide which way to run it. Am I going to go short or am I going to go long? All right. And really what it all boils down to is backtracking to what I said earlier. Most of the time, we're not going to get the follow through in the market that we want. There's going to be ebb and flow. We might finish green on the day, but it's not just going to be a day like we saw it today. Today was a very good follow through day. So once again, it all boils down to timing and direction. All right. So even though this strategy was designed as a short strategy, after seeing those metrics in the first 15 minutes and where we were, in the grand scheme of things, I'm like, nope, today is a day to run this strategy long. And look what happened. Okay. 15 minutes after the open, I launched it, and it never looked back. We peaked out here around, I don't know, I think it was 660 and change. I took a screenshot. Let me see here. Okay, so this was it at its peak, up a little over 600 bucks, 660 to be exact. But this is where we finished at the close, because guess what? Market pulls back a little bit. But as far as picking which direction to run a specific strategy, hit the nail on the head today. All right. Now, if I showed you the inner workings of this strategy, what I've done is it's a simple configuration. All right. We want liquid stocks. We don't want any of these stocks showing up that trade 100,000 shares a day with a 50-cent spread. Okay. These are all stocks that have averaged 1 million shares a day over the past 30 days. We're weeding out ETFs and iShares, and we're capping it at 200 bucks. The alert is a new high. It's as simple as that. All right. So tomorrow, will it be run long or short? Don't know yet. We'll see how the compare accounts work out. We'll make the decision at that point in time, and we'll see what happens. But more times than not, I'm right on the direction to run this strategy. So it simplifies everything. And especially once we get ported to a $0 broker-dealer, just imagine letting things like this work for you. Okay, I think we're going up today. I think we're going long. In the old paradigm, you'd focus on 2 or 3 positions, and maybe they go with the market, maybe they don't. All right, but you're kind of held hostage by those 2 or 3 positions, and we've all been there and done that before. We're in a position, market's going up, it ain't going up. All right, so this is in the grand scheme of things, it's a simpler way to look at trading the markets. If you don't have to pay commission and you think the market's going to be bullish on the day, what does it make more sense to do? Just kind of pick and choose 2 or 3 positions, or go, you know what, I think I'll diversify my long bet in 30 different positions in highly liquid stocks and just focus on the overall movement of the blotter. And when I think it's time to get out, I just punch the button and I say, thank you very much. Okay. picking direction. So that's what it's all going to boil down to in the future, is just going, okay, well, which direction should I run my favorite strategy today? Is it going to be long or is it going to be short? It's a much more logical way to do things. It's a lot simpler to do it that way. And man, I haven't quoted old Leonardo da Vinci in a very long time, but it was him that said, simplicity is the ultimate sophistication, okay? And you can apply that to just about every aspect in life, and you can certainly apply it in the trading world. And keep in mind too, there's nothing wrong with demo trading. It's a great learning tool, but once we get live with a $0 broker dealer, there's no substitute for live execution. So just think about it from this perspective. You can learn at a very cheap rate in a live market environment by doing 1-share trades, 5-share trades, 10-share trades. That's how impactful this zero commission game is going to be for us. And with these advanced tools and the ability to conduct trading in this capacity, which currently, as far as I know, nobody else is offering information like this and the ability to apply it. So that's why for the longest time, running strategies like this looked great in theory. It just wasn't feasible because you could never overcome commissions, okay? But ladies and gentlemen, that is no longer the case, and we are feverishly working to get live on the first $0 broker dealer, and you know, bated breath all around. I'm hoping sooner than later because I want it more than anybody else, and I know all of you guys out there are wanting it too. So it is coming down the pipeline. We just don't know exactly when it's going to hit yet, but by all means, you will know when it does come out for sure. Okay. So I think we're almost at the top of the hour here, so probably a good place to stop. Want to thank everybody for attending, and yeah, Jeffrey, it's like diversification for day trading. And you know what, this is just one example, okay? I know Andy's been doing this too, except he'll take a long and a short strategy, run them both together, apply the same type of theory here. When, you know, just think about it, it frees you from living and dying by 1 or 2 or 3 strategies. You know, you put on 10, 20, 30, 40, 50 or more different positions, and you're no longer held hostage by one strategy or one position not working, or, you know, living and dying by every tick on one trade. It's a lot more zen way to approach the markets. You're a lot more diversified. You're in a lot more things that could actually go for you. And in the end, it's all about the overall P&L, and you can separate yourself from each and every stock and just work from, let the data, you know, work for you. So it's going to be very exciting heading into 2020, knowing that this is close, but soon the power will be in our hands in the zero commission environment to actually take advantage of data sets like this. Very exciting times. All right, well, I think I've rambled on enough for today. So Scott, if you're ready to walk us out and tell everybody how they can save a little bit of do-re-mi, well, then I guess it's that time.
All right, sounds good. Yeah, a couple items to lay out. Keep in mind, the test drive's over, so you don't need to show that slide. Should have taken
Yeah, there you go.
But there are ebooks, and they're free, and everyone.
We lost you, Scott.
Yes, we did.
Okay, well, looks like Scott's having technical difficulties over there, so we'll see if he comes back or not. But as Scott was beginning to say, we've got free ebooks. So if you haven't downloaded these guys yet, you might want to do yourself a favor and do so. Myself, Steve, Andy, and Sean all contributed to the different modules. So TradeIdeas.com